Time I'd like to introduce you to Chris Clough, the president of Paper Trails. He's our expert on all things payroll and PPP in Southern Maine and has helped so many people navigate all of the different changes facing us in the last couple of years, and I'm sure many to come. Take it away, Chris.
Thank you, Laura. Yeah, this is the next thing that's come down the road in our COVID world that we're living in. Definitely another law and rule change here. The employee retention tax credit is what we're going to go over today. The employee retention tax credit was actually, let's see if I can advance my slide. Here we go. The ERTC is a fully refundable tax credit that was designed to keep employees on payroll. It was actually originally created under the CARES Act last April, but it didn't get a whole lot of press. The PPP got a whole lot more press than the ERTC. And the big reason why is that anybody who got a PPP wasn't eligible to use the employee retention tax credit. So it really excluded a lot of businesses. The PPP was a lot easier to access, a lot easier to calculate. So people went that route rather than the ERTC. However, this year in the Consolidated Appropriations Act of 2021 that was passed in end of December, early January, the ERTC was expanded and changed, which was really helpful to a lot of businesses. Now, if you got a PPP, you can also use the ERTC, which is huge. So you're allowed to use both credits, both programs, if you are eligible. However, you can't double dip on PPP forgiven funds. So if you had wages that were used that you got forgiven under PPP, those wages are not eligible to be used for the ERTC. They also extended and expanded the credits into 2021. So the new credits will go until June 30th of this year. So you can use them in first and second quarter of this year. And they allowed you to go back and apply for any credits you may have been eligible for last year. So there's the opportunity to get some nice checks from the IRS for these credits, both for last year and for this year. This can be a pretty lucrative tax credit. We've done a number of these already. We have some that'll, we have numbers ranging from $15,000 to $110,000 to $240,000 in credits. We're just starting to calculate the 2021 credits. We want to make sure people are eligible for those before we start doing those credits. But the credits so far have been pretty lucrative, depending on when your PPP came through and how many people you had on payroll and what you paid for wages and so forth. So it's definitely worth looking into. There, even if it's $10,000 or $15,000, that's $10,000 or $15,000 that is certainly, I think, welcome to most businesses, especially right now. There definitely is a lot of work that goes into determining eligibility, calculating the credits, and applying for that payments, and we'll go through that process. There's a lot of detail that goes into that and how that needs to be calculated. So definitely pay attention as we go through that. The nice thing about the ERTC, unlike most other programs and grants we've seen, there are no restrictions on what the funds could be used for. It's a straight tax credit. So once that money's in your account, you can use it for whatever business purpose you need. You don't have to come back and substantiate what you've spent the money on. It's literally once you've determined eligibility, you've applied, you've gotten the money back, it's all yours, which is nice. It's definitely a benefit of the program as well. And we're going to go through a whole overview. So the first step is to determine your eligibility, and eligibility is really important, and it can be a little bit confusing and so forth. So we want to make sure you're eligible for the program before you start doing any calculations. The eligibility does vary in 2020 and 2021. So, if you're going to go back and do your credits for last year, you have to make sure you were eligible last year. And if you're going to do them this year, you have to make sure you're eligible this year. So for both years, it doesn't matter. The kind of first entry point to get into the program is your business must either be fully or partially suspended by a COVID-19 governmental order, and only during the period that the order is in force. So what that means is it does have to be an executive order, something specific written down, an order from the government that says your business cannot operate at full capacity or at all. There are a lot of FAQs on how this works, but just take restaurants, for example. Restaurants in the state of Maine, since they were allowed to reopen in June of last year, have been restricted to no more than 50 people per room, and everything has to be spaced at 6 feet apart, which significantly decreases the amount of tables and guests you can get in a restaurant. So that does count as a partially suspended governmental order. And you'll want to get the government order off the governor's website. Make sure you have that in your files to make sure that you're staying in compliance. You can document that you are doing that. Now, again, we use the restaurant example because that's the most common. If we look through the rest of last year and we look currently, all restaurants are still under those same restrictions. So even through 2021, the business would continue to be eligible for these credits. As we continue into 2021, if the governor relaxes those credits, she has done a little bit of relaxation, saying we can go to 50% and 75% later this spring. However, things still have to be 6 feet apart. So if your restaurant's small, for example, that doesn't necessarily mean you can get any more guests in. So at this point, for the foreseeable future, those restaurants, again, in this example, would continue to fall under this partially suspended governmental order. If all of a sudden on May 1st, the governor comes out and says there's 0 restrictions, you can put tables back together, this is going to be like Florida. On May 1st, you have lost your eligibility for the ERTC because that government order has been rescinded and you have no restrictions in running your business. So even if it's in the middle of the quarter, as soon as that government order is rescinded, you're no longer eligible. So that's the first criteria, is that the partially or fully suspended. Or if you do not qualify for that, you can still qualify if you experienced a significant decline in gross receipts during the calendar quarter. And we're going to talk about what that significant decline stands for right now. So this is where the guidelines change a little bit for 2020 and 2021. In 2020, the significant decline had to be less than 50% of your gross revenue from the same quarter in 2019. And we're going to show you an example of this in just a minute. So if you did $100,000 in sales in quarter 3 of 2020, you would have had to have done more than $200,000 in sales in quarter 3 2019 in order to qualify. So it's a 50% or more reduction. In order to remain qualified for the ERTC, your gross receipts can go up. So you could do a 60 or 70% of your previous year, but the second you hit 80% in the same quarter, that's your last quarter. You get to finish out that quarter and then you are disqualified. And you'd have to hit the 50% decline again to re-qualify. Again, I'm going to give you an example of this in just a minute. So a little more graphic. For 2021, the number changed a little bit. They actually got a little more generous. Basically, in 2021, you had to show that your gross sales were 80% or less in the same quarter as 2019. So we're still comparing to 2019, not 2020. And you have to look at they had to be 80% or less. So you didn't have to hit that 50% mark. You really just had to be down 20% is pretty much. And you have to stay in that 20% reduction in order to remain qualified. There's no entry and exit point like there was in 2020. So it's actually a little bit easier. When we talk about gross receipts and what that means, there are a few clarifying points. They've issued those in the January law. So we now know that if businesses who weren't open in 2019, they could use their first quarter they were open in 2020 to calculate that credit. So that's a nice feature as well, whereas last year you weren't able to do that. If you weren't open in 2019, you were out of luck with that. They've also defined what it looks like for nonprofits. So nonprofits can apply, and they've specifically defined what your gross receipts include for a nonprofit. And that includes, contributions, gifts, grants, dues and assessments, sales or receipts from unrelated business activities, and the sale of assets and investment income. So that's what they've specifically defined for gross receipts. For all of the business, it's all the income you bring in. Whatever your cash register says at the end of the day, those are your gross receipts. And you want to make sure you have good records of that, because again, that's going to be part of your substantiation of your eligibility. So here's a little bit more of a graphic representation of what those reductions look like. So if we look at quarter 2, 2020, in quarter 2, 2020, the sales were $50,000. In 2019, the same quarter, your sales were $125,000. So your sales were 40% of what they were in 2019. So you divide current quarter by last year, that's how you're getting that calculation. 40% is what of your sales or what quarter 2 was. So are you eligible? Yes, because you're below that 50% number. In quarter 3, you were down only 68%. Now, even though you were above the 50%, you were still below the 80%. So you were eligible. When we go into quarter four, the sales were 93% of what they were last year. So now you've hit above that 80%. So this is your last quarter that you're eligible for in this year, because you hit above that 80%. You can use the full quarter, but that will be the last quarter. There is no fifth quarter in a year, so you don't have to worry about it. But if, for example, in quarter three, you went to that 93%, you would not be eligible in quarter four. So if we look at 2021, now again, the numbers have changed a little bit. The requirement has changed. So we're looking at a 73% of sales in quarter one. So yes, because you're under that 80%, you are eligible. In quarter two, there was an increase. So no, you wouldn't be eligible. And again, if your sales were above that 80%, you would be able to finish out that quarter, but you wouldn't be able to do it any further. So I know the eligibility and the pricing, the variations are a little confusing. So let me know if you have questions on those. We're happy to go over that a little bit more. And we'll be reviewing this pretty significantly for the clients that we prepare these for. So now that you're eligible, what does the credit look like? For 2020, the ERTC credit that's available is available for all wages from March 12th to December 31st. So it's my guess is most people aren't going to be eligible in March for several reasons. One is because your wages probably weren't down enough in that situation. And most businesses that are probably going to be eligible for the ERTC were shut down on March 18th of last year. So you may be eligible, and you didn't get your PPP until the first couple of weeks of April. So you may be eligible for some ERTC between March 18th and whenever your first PPP payroll was, if you were running payroll. I mean, I know a lot of businesses on March 18th, they closed the doors and stopped doing business altogether. So they probably wouldn't have any wages to take an ERTC on, but that's certainly something to look at. The credit is equal to 50% of qualified wages, capped at $10,000 per employee for the whole year. So basically you can earn up to, if an employee earned $10,000 in a year, you would get 50% of that, or $5,000. If they only earned $5,000, for example, your credit would be $2,500. And if they earned $20,000 in the year, they would still only get $5,000. So the cap is $5,000 per employee for the entire year. When we look at 2021, again, they changed the rules. They got a little more generous. So qualifying wages will go into effect from January 1st to June 30th. So we have first quarter and second quarter. This has not been extended at this point. It's not in the current stimulus package that it's going to be extended. So we do believe this will end in June 30th. The credit is equal to 70% of qualified wages this year, up to $10,000. But this time you can claim that credit per quarter. So you could get up to $7,000 per quarter per employee if you were eligible. So it's much more lucrative in this situation. You get up to $14,000 for the year, which is again quarter one and quarter two only. If you got a PPP this year, that's something to consider as well. And we're going to talk about that in just a minute. So when we talk about qualifying wages, there are some restrictions. All qualified wages are basically all wages paid to an employee. So it's similar to the PPP, same rules. We've got regular overtime, bonuses, commissions, tips, stipends, pretty much anything you pay in gross wages is going to be considered eligible. The qualifying wages also include the cost of an employer-sponsored health insurance. So if you pay for health insurance for your employees, you can include that in there as well, excluding the portion that they pay. So if the cost is $400 a month, they pay $100 a month, you would be able to include $300 per month in their wages. You may not need this. So if there's enough credit to go around, you may not need to add the health insurance in there, but it's certainly something to look at because it may help you maximize that credit. The other piece is owners with more than 50% equity in the business are not eligible for these credits. So you need to back those out, as well as their immediate relatives. So this is the full, we talk about immediate family. So parents, spouse, children, siblings, stepchildren, all that kind of stuff. Those are all excluded as well. So those wages are not eligible at all. You can't use those. So now let's talk about the PPP. If you took a PPP last year, your ERTC doesn't kick in until after you stopped using PPP funds to pay for your payroll. So if you used PPP funds from April 1st to June 30th, for example, you will probably may still be eligible for ERTC in Q3 and Q4 if you meet the eligibility requirements. You can use that. But if your PPP went till October, I know a lot of people just use payroll and it may have dragged on a little longer. You really can't apply for the ERTC until after your PPP funds were exhausted last year. If you got a PPP for this year, a lot of people got it starting in the end of January, beginning of February. You may want to hold off on using those PPP funds until you've used some of the ERTC first. In the analysis that I've been doing, most people, to get them to 60% of their wages or 60% of the PPP, they probably can use ERTC up until the beginning of April, mid-April, depending on how much your payroll is. And then you're going to need to start using the PPP funds to make sure you can get those forgiven. Because remember, you do have to use 60% of PPP on payroll. So that's important to make sure you can get that PPP forgiven, and you can't overlap. So there's definitely going to need to be a lot of analysis done to make sure that you're not double dipping on these credits. Because the last thing we want to do is create any headaches with that. Now that you've determined your eligibility and you've gone through everything, you've got all your credits calculated, now you've got to go through and apply for your refund or your credits as it may be. So the first thing is determine and document your eligibility. This is really important. In the IRS guidance that was issued last week, which we finally got, thank goodness, they do list a number of items that they specifically want documented. And make sure your documentation is really good, because if you ever do get audited, you're going to want that to prove that you're eligible. The last thing you're going to want to do is have an audit and not have the paperwork to support your eligibility. Then go through, calculate all the wages. You're going to have to look at each quarter and make sure you calculate in the max, factor in the max credits, remove any owners, make sure your wages are correct, and continue to make sure that you're verifying your eligibility in each quarter, because you could fall out and you want to make sure that you're not applying for something that you're not eligible for. In 2021, it's a little bit easier. Hopefully, you can take the credit as a reduction in your 941 payments. So as you're running payroll, just basically don't make your 941 payments and take that credit back as the credit. If you don't use the whole credit by the end of the quarter, which you probably won't on your 941 at the end of the quarter, all you're going to have to do is go through and request a refund on the 941. Now, when that happens, for example, we file our 941s electronically. So IRS generally within 30 to 45 days processes those, and hopefully a check will be cut. But IRS is really far behind. So it would not surprise me if those take a lot longer, especially if you're filing on paper. It's going to take a lot longer to get those credits back and get that money into your account, but you should get a check eventually for that amount. You can file a Form 7200, which is a request for expedited advanced payment. We've done this with a couple of clients, and I have found that it is anything but expedited. So it's definitely probably something you should just avoid and just deal with it on your 941. So for 2020 wages, you're going to have to complete all your calculations and then file an amended tax return for whatever quarters are eligible. So basically file out the 941X and submit that. Same thing, you're looking at 941Xs are usually filed on paper. It's sometimes taking 4 to 6 months for IRS to process those. So once those go into effect and they get processed, you should get a check back, but it's definitely not going to be a quick process on that either. Should be worth the wait though, hopefully. If you don't calculate your 2021 credits quick enough, you can file a 941X in that period as well. But obviously, the sooner you get those filed, the sooner you get money back. So that's important. Again, they'll issue the refund as soon as they process the returns, but things are really backed up, so it could take them a while to do that. And again, make sure you store all your documentation and requests in a safe place in case there's an audit or review. Generally, we recommend things are stored for 7 years. In the guidance that I read on last week that the IRS issued, they only said you had to keep things for 4 years. If it was me, I'd hold on to it for 7 years just in case, because that's how long they have to come back and look at your tax returns. That's the big thing. So we know this is pretty daunting. Paper Trails is going to offer a full service solution for this for our clients. We will help you determine your eligibility, calculate your credits, and file for all the payments on your behalf, so you don't really have to do anything. We probably will need a little bit of information from you to get things going if we don't have things already in our records. But basically, it'll be a full service solution. You do have to do this for every quarter that the credit's available. You have to go through and calculate and apply. We'll provide all the documentation, all the eligibility pieces for you, for your records. All you have to do is sit back and collect the check from the IRS. So for this service, we will be billing for this. It's quite a bit of work, but the credit should be worth it. So we'll be billing $500 plus $15 per employee to do that. And we've already started to reach out to a lot of our clients who we think may be eligible, but if you haven't heard from us yet and you want to learn more about this, please feel free to reach out to us. We're definitely happy to help you with this. We've got a number of clients we've already started working with this on, and the credits are definitely worth it. So it's a great program to be involved in and keep those things going. So I think now is a good time to answer questions. I know that there was a lot there that we went through, so I'm sure there's questions, and feel free to ask. I think Laura's going to help me figure out what questions we have. Feel free to put them in the chat, or I think you might be able to raise your hand and I can try to allow you to talk here on the webinar, but feel free to ask away. So the first question is, will the slides be available after the presentation? And yes, hopefully tomorrow. We are recording this webinar and I'll be posting it by tomorrow on our blog at papertrailspayroll.com/blog. So you can get that right on there. We have a raised hand. Let's see if I can. Jeff, go ahead. I think you're muted, but try to ask away.
How's that? Is that better?
There you are. Well, you're here.
All right. All right. Thanks, Chris. It was a great job. But I'm going to have you figure it all out. Thanks.
That sounds great. We'll touch base afterwards.
All right. Thank you. Bye.
I have another question. Is it safe for us to do the Excel calculation and send it to you? Yeah, we certainly can talk about that if you want. We'll have to figure out what that looks like. For sure, we can talk about that offline. Looks like another question. Can we qualify with quarter 4 2020 versus quarter 4 2019? Yes, I think if, as long as you become eligible in quarter 4 2020 and your sales are down enough to meet that, I believe that you'll be eligible. I guess I may not completely understand the question, but yeah, that would be my answer to that. Another question, do you just contact me to take care of this? Yes, my email is right there. Just shoot me an email and we'll get things rolling. We do have an engagement letter just to send out to get the process started. All right. Looks like
you have a second question. I don't know if you've seen that one. If the charge of $500 is per quarter?
Yes, it is per quarter because we do have to go through and calculate each quarter separately and prepare all the returns separately. And it is a per quarter process. But like I said, it is a significant amount of work to go through and do this. We have definitely seen the credits come back very substantially. Like I said, sometimes they're up in the hundreds of thousands of dollars. So I definitely think it's worth going through the process.
I don't see any more questions so far.
Looks like that's about it, but definitely if you have further questions or want more information, please feel free to email me. My email's here. And like I said, we will be posting this hopefully by tomorrow. I'll get it up on the blog and we'll have the full recording for your reference. And you can have all that information and we'll be good to go. So thank you so much to everyone for joining us today. And we look forward to working with you. And if you have any further questions, please let me know. Have a great afternoon.